Tuesday, January 19th, 2021, Monaco 64, home of alternative economics and contrarian views. So we're going to look at how shipping costs are going through the roof, and that's going to result in a lot higher prices, especially in Europe. I think it will come to the United States as well. It's not impacting the United States as much right now. This is the consequence of interference in the economy by Keynesians. They have this misguided idea that inflation is created by the consumer, by labor. They don't realize that inflation is purely a monetary phenomenon. So we're going to learn the hard way, because it seems really counterintuitive, this story that I'm going to go over today. It came out yesterday in the FT, that globalist publication, which I still subscribe to because sometimes they do have things that are interesting. It's just how you look at it, your perspective on it. Of course, they're not going to mention anything about monetary inflation here, but I think it's got all to do with it. And we also need to look back a little bit, a few decades since China became a member of the WTO. What that basically did was outsource all the industry from the Western world. Not all, but a big chunk, of course. And the big corporations did really well in the West, in the US, North America in general, because they got a lot cheaper labor. And the monetary authorities and governments could continue to keep printing money and spending as well, because they're getting the cheaper goods from slave labor China, so to speak. But now this story is saying tripling of China-Europe shipping costs threatens global supply. And you'd think shipping costs would be going down because of the lockdowns. People are not buying as much and doing as much. But no, it's had the opposite effect. That's the problem with central planners. They never think of the consequences. So we'll go through this article, and I think it's going to apply to everywhere around the Western world, not just Europe. I think it's coming to the US. And you see why it's a little bit less in the US when I go through the article. So prices at record high, fueled by shortage of containers and recovery in consumer demand. So let's have a look. The cost of shipping goods from China to Europe has more than tripled in the past 8 weeks, hitting record highs as a shortage of empty containers stemming from the pandemic disrupts global trade. Of course, they blame this crisis for everything. The cost of shipping a 40-foot container from Asia to Northern Europe has increased from about $2,000 in November to more than $9,000, according to shippers and importers. Lars Jensen at consultancy Sea Intelligence said, "It is a bottleneck problem. These rates are being driven by customers fighting over a limited amount of resources, containers." There you go. Too much money chasing too few containers. Thousands of empty containers were left stranded in Europe and the US in the first half of 2020. So you see, the central planners didn't think that through. They think, well, it's not going to be a problem. There's not going to be an inflation because the economies are going to slow down, people. But they didn't think of that, right? That's where they fail, these central planners. When shipping lines canceled hundreds of trips as coronavirus lockdowns caused a sudden slowdown in global trade. So you've had a slowdown in global trade, and that's actually a few months down the line, it's created a shortage. That's why I always look at the Austrian School of Economics, because they look at human action. They actually think about the real world and what could happen and the consequences, while the Keynesians just think of numbers. They're really useless, I would say, and unfortunately they're in charge. We have a Keynesian today is going to be testifying in Congress to become the Treasury Secretary, Janet Yellen, right? Anyway, when Western demand for Asian-made goods rebounded in the second half of the year, competition among shippers for available containers sent freight rates soaring. John Butler, president of the World Shipping Council, said, "We've gone from a tremendous drop-off to getting whipsawed into historically high cargo volumes, and there's now more than the terminals can efficiently handle. Congestion at ports is contributing to higher prices, with shipping lines charging extra fees to compensate for longer waiting times." So yeah, the ship owners, they have costs. So if they have to wait in port longer, it costs thousands of dollars to keep the ship running, the crew. So another thing the Keynesians don't think about. Since November, the cost of shipping to Europe has been exacerbated by the diversion of containers to trans-Pacific routes. By contrast, the cost of shipping from China to the US has plateaued since October, when the Chinese government asked shipping companies to cap their rates. So here you go. Your biggest enemy, supposedly China, is actually helping the US there. That's why I said earlier that it hadn't affected the US as much, but it could. Who knows? Philip Edge, chief executive of UK freight forwarder Edge Worldwide, said some businesses were being charged $12,000 per container, up from about $2,000 in October. Oh, that's 6 times more expensive. The UK's Association of Manufacturers of Domestic Appliances said in a statement that its members reported increases in shipping costs up to 300% since the start of 2020, including cases where the increase in cost of shipping is greater than the retained profit from the goods. So they're losing money. So the cost will have to be passed on to end users. Yeah, that's you and I and everyone else. Producers do not expect to be able to absorb these huge increases in freight costs, it said. The owner of an importer of leisure goods based in Manchester, who did not wish to be named, said the container shortage was having an enormous impact on business, with some orders placed in November still waiting to be shipped. Another thing I wanted to rant about, I don't think we've received the post in over a week. So where are the postmen and postwomen? Where is the Royal Mail? I mean, it's ridiculous. Anyway, the question is, do you pay the $12,000 cost now and pass those prices on to customers, or wait and risk stocks drying up, shortages? This is not food, of course, but it could apply to food in the future. Who knows? So here the container freight rates, you can see there. So what I was hearing last year from the mainstream, when people like me started saying we're going to have inflation because they're continuing to print money to give people money, and they're shutting everything down. They said, oh no, but people are not going to consume as much. Well, there you go. They were wrong. Sometimes it is frustrating trying to tell people things that don't seem to make sense, like we try to do on this channel. And but there you go. This is another example of I told you so. And nobody likes to say that I told you so, but anyway, let's continue. The disruption and delays are beginning to affect global supply chains, according to economists. Well, we were saying that right in the beginning of the crisis that it would. Signs of strains are building up, said Neil Shearing, chief economist at Capital Economics, who warned that the pressure is expected to intensify before it eases. Well, Capital Economics is run by a guy, I forgot his name now, but he wrote a book about 20 years ago, even a little more than 20 years, saying that inflation was dead. So that's Capital Economics for you. A recent survey by IHS Markit found that in December, Eurozone manufacturing suppliers' delivery times reached the worst levels since the height of pandemic-related lockdowns last April, and delays in transportation and general goods shortages at suppliers were widely reported. So this is the real world kicking in. Surveyed companies said they were running down their stocks of raw materials and semi-manufactured goods, resulting in falling inventories, and reported a rapid increase in input prices. Maybe there's a silver lining. Maybe European and even US business will learn to not depend so much on outsourcing anymore. Maybe start making things at home. We'll have to see. We'll have to see. Bert Kolen, senior economist at ING, that's a Dutch bank, said supply shortages and higher freight rates could dampen trade growth a bit and contribute to temporarily higher inflation. Well, he doesn't know what inflation is because these are higher prices, Mr. Kolen. This is not inflation. Pressures over the course of the year, inflation pressures, he said. Shipping lines hope the slowdown in Asian manufacturing that typically accompanies Chinese New Year in February will allow carriers to tackle the growing backlog of orders and lead to at least a temporary cooling of prices. Well, we'll have to see about that. But Peter Sand, an economist at International Shipping Association, BIMCO, said container shortages were likely to continue long into 2021. Despite carriers recently placing new orders for containers, which he described as too little, too late. Mr. Jensen said that although prices may drop a little, there's still a huge amount of cargo waiting to be shipped. Pressure on maritime supply chains should ease when people have more options to spend on services because coronavirus-related restrictions have been lifted, Mr. Butler said. But when that happens is anyone's guess. So there you go. I think this story is going to get worse. We're going to keep an eye on that, but it should translate eventually in the next few months into higher prices of whatever is being shipped from there. I don't know exactly. We know a lot of stuff nowadays is made in China, unfortunately, because of the transfer of manufacturing and many things from Europe, from the UK, from North America in the last 20 years plus, ever since China was allowed into the WTO, right? So with that, let's quickly look at where the markets are this morning. Yesterday, it was very quiet in the afternoon because the U.S. markets were closed for a holiday, Martin Luther King Jr. holiday. Today, things will get back to normal. It's almost 9 a.m. London. So we've got spot gold up $6 at 1843.70. Range has been 1835 to 1845. So we're near the highs. Silver's doing well. Of course, it's early days. The U.S. is still due in. Usually when the U.S. comes in, you see the metals come under pressure. Not all the time, but most of the time, right? Right now, silver is comfortably above 25. We're at 25.22, up 27 cents or 1%. The Dow future is up 85 points. S&P is up 12. NASDAQ 100 future is up 85. So up around 1/3%. The major indices, NASDAQ up about 2/3. The fiat currencies, they're rebounding a little bit. The pound is up slightly, 135.96. The euro is up about 1/3% at 121.12. The dollar is up actually versus the yen, so that's kind of neutralizing the dollar index a little bit, even though it's much more heavily weighted towards the euro. Dollar is up about 1/3 versus the yen, just below 104. Dollar's down back below 650 versus the Chinese yuan. High grade copper is up 1/3%. WTI crude is up 0.75% at 52.57. Let's quickly check the 10-year yield. 10-year yield is at 1.11, up 1 basis point. So let's see what Janet Yellen says today. Someone made a comment the other day in one of my videos that Janet Yellen has said that she's not going to adopt a weak dollar policy. But I mean, when you're talking about a lot of stimulus, I think there was a Fed official, president, I think, from one of the regional banks, Bostich, I think his name was. Yesterday he said that MMT doesn't look that radical anymore. So when a Fed official is talking about MMT being normal, and when you're getting uber Keynesian like Janet Yellen at the US Treasury, are they really going for strong dollar policy? They might want to regurgitate that in public in order to make people think that they are. So I continue to see a sea of red in terms of deficit spending, in terms of the debt. Of course, Janet Yellen thinks that by doing all this fiscal stimulus, monetary stimulus, it's going to kickstart the economy. They like to use that term, kickstart. But yeah, it could for a few months or maybe 6 months, maybe a little more. But in the long term, it's going to destroy the economy and the currency. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Hive, DTube, BitChute, and Library. I wish you all a great day. Take care. Bye.